Hello everyone, I'm Shen Yuan, the founder of Joint Commonwealth Fund, or JCF. So in today's JCF Weekly, what we're going to talk about is what assets are worth holding long term. So for those of you who may or may not be familiar with Bitcoin or cryptocurrency, today I'd like to share some of the views that I've learned recently from a guy named Andreas Antonopoulos. I cannot really pronounce his last name, but so he's actually a guy who has been preaching and learning about Bitcoins since pretty early on. And right now he travels the world around to talk and share with people about the implications of Bitcoin and cryptocurrencies. And he doesn't take side on any of the projects or companies. So he's very neutral in terms of his role, and he doesn't really take any financial advantage from this technology trend. So many of his observations are highly respected and regarded, and I highly recommend you to watch Andreas' videos and explanations of Bitcoin and cryptos on YouTube or in the internet. But for today, I'd like to share a bit about his example of what is it really that, what's the actual utility use of Bitcoin. So we have to go back to, how money was being invented. So a lot of us would treat money as being valuable, but money really isn't value. Value are the things money can be traded for. For example, like bananas, okay? You can eat a banana and you can, feel no longer hungry. So that's the value or utility of a banana. So banana has value. But so in the traditional, in the ancient times, people simply would have recognized these values and they would trade between themselves for different people's, values. So for example, if you have bananas and I want some banana, what happens is I would use what I'm good at. For example, if I know how to make bread or make clothes, that's what I would trade your banana with, okay? However, as people start to trade more and more stuff and more complicated things, no longer direct trading is not, sufficient. So then people start to move from something like a tool or a token to represent the value. And they would try to find something that is not easily, degradable. So even though banana has value, it's not a good idea to use it as a token to store value. Because, for example, very simply, bananas would rot. After a week, it would become rotten and disappear. So if you cannot really store value with banana, although banana is the value itself. So people started to use something like seashells, something that's hard and durable and maybe also, not easily found, that's limited in volume in its supply. Then people started to, but seashell may not be, something that's really that limited. So people discovered gold and precious metal like gold and silver that will really be a good candidate to store value in terms of facilitating people's trade. So gold in itself doesn't really have values, but it's a vehicle to transfer values. But gold is really heavy to carry around. So later people started to use less, precious and more available, more abundant metals like copper or nickel. And that's when the governments started to make these coins as the representation or tokens for value. Now, the interesting thing is when governments started to ask people to use these, they see, no, we don't like that because we don't know what this is, whether it's trustworthy. So government has to sort of back up their tokens by saying to people, well, anytime you like, you can come to us and we will exchange your coins with gold. We will have gold to back it up. And this way, people started to join into using these other kinds of tokens besides gold as a means to transfer values. But even with coins, it's still, not easy to carry, especially if it's a large amount. So as the economy grows, people started to use something like, papers as the trading. And that's when government start to issue paper money, that's also something not being trusted. So they have to say again, now we will back this up with like gold or other precious metal or other kind of forms of valuables and use the paper. Okay, so the same thing actually happens again and again, and we transfer, more or less, we have transformed ourselves from using just coins to paper money to like plastic, like credit card. And now what money really is no longer even concrete. It's mostly numbers that reside in the computers of central banks, and different commercial banks. So now when you are receiving your salary, you don't even receive, something concrete anymore, not even a check. A lot of people simply get their salary as a transfer of money in terms of numbers in your bank account. So that's how money has sort of progressed. So Bitcoin is really the next step towards the evolution of money, because with things even like fiat currency or fiat money, or like numbers in the bank, there can still be the concern of issue of what if the government is no longer trustworthy. And this is something that has happened in certain parts of the world, where the government simply starts to print more money when they need the cash, need to pay salaries or to buy other things for the government. And that causes inflation. In some cases, really painful inflation. Like Argentina, they might have just lost, 1/3 of their value recently of their currency. So this is really just the evolution of how things progress. Now, Bitcoin is something that is not governed by any government or any institution or individuals. So it has the neutrality of not being manipulatable in terms of its supply. Its supply is fixed at 21 million. That's how much there is, total number of Bitcoins. But it does have other things that's even better than traditional means, like either fiat currencies or, like gold. Because not only it can store value as a means of transfer, as a tools, it can also, more easily verify and easier and cheaper to store and transfer. Like if you want to send $1 billion worth of gold, you probably need a lot of storage, you need security guards, you need experts to verify whether it's pure gold, whether it's been tinted. But with Bitcoin, it's very easy to store, to transfer, and to verify. So in many ways, it's an even better vehicle and uncontrollable by governments, in the sense that it's been, very neutral as a means to hold and transfer value. So this is the fundamental value of Bitcoin. And if that is not enough, right now, for some of you who may or may not know this, right now besides Bitcoin, there is 2,500 at least cryptocurrencies out there. And there is over 20,000 exchanges around the world that you can simply go into and change Bitcoin with any kind of fiat currencies you can think about. Now, the interesting thing is, all these cryptocurrencies, you may not be able to purchase with US dollar or renminbi, but you can definitely buy them with Bitcoin. So in that sense, Bitcoin has become sort of the de facto currency in the crypto world. Now, if you believe that cryptocurrencies or blockchain will grow in terms of its value, in terms of its usage, applications, then Bitcoin will become very instrumental behind this economy. So that's some of the basic values for Bitcoin. Now, you might ask, what could be the case for some other cryptocurrencies, like Ethereum or like Ripples? Now, some of these, they are issued by organizations or companies. So if you trust these organizations, essentially they are guaranteeing the value, sort of like how governments used to say, you can always trade back your paper currency with gold that we hold as reserve. So if you trust these companies, you can essentially use the tokens that they issue, the tools they issue to store, represent, and transfer. That's their cryptocurrencies. And there are other uses. So for individual ones, you probably need to understand more about what its use case is and whether it holds a solid position within its use case. And if so, it could be a valuable asset in the long term. So whether Bitcoins, what is something what assets that's long term and you can still believe that it has value? Well, as a tools to store and transfer values, probably gold and also real estate is serving this role. But with the appearance of Bitcoins and other cryptocurrencies, the scene will simply become a lot more, interesting. And in a sense, Bitcoin is even more, protected and valid long term than things like gold or real estate houses or lands. The reason is that, like, even for gold, its supply can still go up. So that's when, because in the future we might be able to mine gold from like asteroids. And for houses, we know that if there's an earthquake or something happens, actually the properties could get destroyed or under bad economic conditions. So in that sense, Bitcoin fundamentally, it has something that's indestructible unless the internet has disappeared, that is. But we don't really expect it to happen unless a really catastrophic event has happened. Okay, so that's for this week's JCF Weekly. And we hope that you have gained some more understanding about cryptocurrencies or Bitcoin. And if you like to get more and learn more, please go to our website. JCF is basically a crypto index fund that invests in the top 10 cryptocurrencies. So if you would like to get a hand or have a stake in investments in the crypto space, we provide a very safe instrument to do so by using index fund as the investment vehicle. And we also have, you have a dividend mechanism that will protect you in the long term. So if you'd like to learn more, please go to our official website at jcf.world. Okay, and if you liked our content, please like us in Facebook or subscribe in our YouTube channel. Thank you very much, and we'll see you next week.